Welcome to Impact Makers Radio, featuring industry thought leaders sharing problem-solving insights to help grow your business and live the life you love. And here's your host, Stewart Andrew Alexander.
Hi, and welcome to another Let's Talk Retirement conversation. And on this segment of the show, ladies and gentlemen, I have certified financial planner Daniel Leonard, principal of Marathon Retirement Planning, calling in all the way from San Ramon, California. Now, Daniel, who specializes in the area of financial planning, will be talking to you today about a very interesting topic. You see, Daniel has taken the time out of his busy day to come and speak to us about planning for retirement. So, if you are one of the growing numbers of people approaching retirement age in the San Ramon area, you might want to, down tools, take a break, stop what you're doing, put on your headset and block out any other kind of distraction as we listen in to what Daniel has to share with us today. So with that said, let's not keep him waiting any longer. Welcome to the show, Daniel.
Thank you. Good to talk to you, Stuart.
You are so welcome, Dan. So let's just jump feet first in. The water is very fine today. Trust me with that one, Dan. Briefly, in your own words, describe the kinds of people who you serve and the various types of situations they find themselves in when they come to you for your help.
Sure. I think for the most part, our target market, or the majority of the people we see, are somewhere in their late 40s to early 60s, because one of the key things that we offer is a way to help them organize their financial life. Many people, basically kind of, I wouldn't say muddle through, but do what they think is right, and all of a sudden their 401k has creeped up from a couple $1,000s when they got started in their 20s to now it's their largest financial asset. And they really don't know what to do with it other than kind of the, people that they work with. They talk to them and try to find out what are you doing? And, it's kind of management by consensus. And we get them at the point where all of a sudden they've realized retirement's a real part of their future. And they all of a sudden have got, $500,000 in their 401k or even more than that, and they're looking for help. So we start by trying to help them get what we call command of the facts, get real statements from, real numbers from real statements, and help them gather all that so they can assess really what it is they have in front of them.
Okay, Dan, before we go any further, it must be said that anything you share with us today is not legal advice or legal assistance. It's purely for the purpose of disseminating information. Can we both agree on that then, Dan?
We can agree on that.
Perfect. So with that said, when you think about those people who you just described, the ones who come to you for your help, what's the most common misconception they have surrounding retirement planning?
I would say for the most part is that, they're contributing enough to get the company match in their 401k, and they feel like they're going to be okay in retirement. We do a lot of work with one or two specific companies in our area, and, one of the companies has a match, which is 75% of the first 6% that they contribute, which works out to a 4.5% match on their annual salary. So if they contribute 6 and they get a 4.5% match, they're putting about 10.5% away each year. And, that's not a bad number to put away. But when you think about, you work for 40 years, saving 10% of your income, and you want to live another 30 plus years in retirement, it doesn't always kind of work out as well as you would hope when it comes to replacing your income, unless you have another source of income like a pension, which fewer and fewer people have these days. We do have, one of the firms we work with has a pension, so it's kind of a nice piece of the puzzle for them. But for the people that we deal with that don't have that pension, it winds up being a bit of an issue. And, we recently had a client that came in making over $300,000 a year, and they were basically putting in as much as they could put in to get the company match. And, in this case, the wife was the primary breadwinner. The husband stayed at home, did some consulting work, and made about $60,000 a year. So they're looking at about a $360,000 a year income. And when we did their kind of cash flow analysis, we showed them that based on what they had saved, we were only going to be able to produce in the neighborhood of $120,000 to $150,000 in income. And while, to a lot of people, you think, hey, $150,000 a year in income, that's great. Sign me up for that program. But as you may know, the Bay Area is kind of an expensive place to live. And if you're making $360,000 a year, and all of a sudden when you retire, you're going to make $150,000 a year, that's a pretty big drop in your income.
Right.
And, we don't always feel the best plan in retirement is just the I'll do with less. Now, a lot of people, obviously, their needs go down once they retire. The home is paid for, the kids are out of the house. But a drop of, 50% in your income can be a bit of a dramatic shift as far as what you need to live on.
So I'm glad you just spent a brief moment sharing an example of how you've actually helped somebody. That's really useful to know. So let me just remind our listeners again about who we have on the show today. So my guest today is Certified Financial Planner Daniel Leonard, Principal of Marathon Retirement Planning in San Ramon, California. And he's here today talking about planning for retirement. Now, with that in mind, Daniel, and for those people who are out there listening in right now and they are approaching retirement age, please share one common pitfall that they need to avoid regardless of what situation they find themselves in.
So the things to avoid, obviously there's lots of things.
So many, right? Yeah.
It's where do you start? But I think one of the areas that I tend to talk to clients a lot about is some of the behavioral aspects of what goes on. And there's lots of different topics out there, but things like the availability bias or herding and loss aversion are all terms that people may or may not have heard of. Obviously, we get talked to about it every time we go to a conference or something like that. But things like the availability bias is where I look at what's going on today, and it has more weight in what I'm thinking about versus what it should really in the long term. So if the market's up 20% and someone says, well, what do you expect a good return to be? Someone might come back and say, well, I'd want 10 or 15%. And, if the market's down 10, well, God, if I could just not lose money or only be down, 1 or 2%, that would be great. Where intuitively people know kind of the long-term averages, at least over the last 20 years, have been below 8, right? So if I'm looking at a year like we're having this year where the stock market's up in excess of that, in double digits, now people start to think, oh, well, I need to get a better return or it doesn't make sense. And my, favorite real life example of this, early in my career, I was in financial sales where I actually represented mutual fund companies and would go out and visit, other advisors and explain to them why they needed to buy these funds. And at, the 1998, 1999 run in the tech market, I was representing, a small cap fund that had very good track record. And I had people telling me, well, if your fund can't get 30%, it's not, I shouldn't waste my time and look at it.
Right.
And, at the time, you could tell people they were crazy, but when we had 3 years in a row of plus 20%, everybody just thought that was, well, it's given. The market just goes up in the morning, right? The sun comes up in the east and the market goes up. But by 2005, those same people were like, hey, if you can get me 8%, I'm happy, right? So it's just that what's in front of us today is what is kind of the most important thing people focus on, and it's just trying to get people to that long-term perspective because, everybody's looked at a mountain chart of a stock or a mutual fund or something like that, and it always starts in the lower right and goes to the upper or lower left and goes to the upper right, right? If you give it enough time, the stock market always hits new highs, but there are periods where, it's below the former high. So you just have to be able to wait it out. And that's the thing that, it's constantly trying to remind people of the long-term perspective and not what's happening today. Because when you retire, you're not going to spend all your money today. You're going to spend it over 30 years.
That totally makes sense, and some really great insights for people to be mindful of. So thanks for sharing that, Daniel. So at this point, I'm kind of curious, Daniel, can you please describe some of your clients' pains and fears? In other words, what seems to be their problem with retirement planning?
Well, I don't think that it's necessarily a problem with retirement planning. It's the inertia to get started. Right? It's that just denial of that they really have to do it. And then once they do, the most common fear that, I hear from most people is, will I have enough? Am I going to run out of money? And like I said, one of our main companies we work with has a pension. So that conversation is a lot easier for those people. But for the people that are outside that company we deal with that don't have a pension, we have to sometimes have real conversations about, you make X amount and we're going to be able to give you X minus this because this is what you have. And if you want it to last, this is what is a reasonable amount to live on. Now, as they get older and, portfolios maintain their value, we can sometimes start to increase it. And, with home values here in the Bay Area, reverse mortgages, and there's other products that we can look at that, as a kind of last resort, we can create some more income from. But, the biggest, I think, fear for most people, whether it's here in the Bay Area or anybody, is will I have enough? And, do I have more money than time?
So, Daniel, when you think about it, successful retirement planning can mean different things for different people, right? Or as you guys in America say, different strokes for different folks, all right? Yep. So, with that said, when you're in that position to help your clients to achieve their retirement goals, when that actually happens, when you're able to create that transformation for your clients, seriously now, on a deep down personal level, what does it give you and how does it make you feel?
Oh, it's a satisfaction because, the best advice I've gotten from, advisors as I started my career, 27 years ago and just working with people, in different capacities is you want to treat those people, like they're your family, right? That's the most common, I think, question I get when we make a recommendation is, all right, so now tell me, if I was your mother, your father, your brother, what, depending on the age difference, is this what you'd recommend to me, right? It's just, for most people, when you're sitting there across the table from them where, we do a 3-meeting process with our clients, so we've sat down 3 or 4 times before we actually make a recommendation, so we feel like we have a real understanding for who they are, is they're still making a decision to trust, us with their life savings. And they want to know that the advice you're giving them is the advice you would give somebody that, is a family member or someone that you care about. And ultimately that's our goal, is the client, the people that decide to work with us long term do become kind of part of the family, right? We want to give them the advice we would give anybody else that is, a loved one that
Right.
we, are related to, right? So it's that satisfaction, maybe like, this may not be a good analogy, but, when you go in and you finally tackle that garage and you finally get it cleaned out and you get both cars in there.
Oh, yeah.
And you just have that like, whew, right?
Yeah.
And that's what, how we feel when we know we've done, good work for a client. When it's all said and done, that they're taken care of, we feel like we've got them in a good place. And, when our clients retire, we only want them to retire once, and people in 2000, 2001 and 2007 and 2008 retired. Some of those people had to go back to work.
So spend a brief moment telling us a little bit about your background then, Daniel, and especially your formal education and your experience as it relates to today's topic of financial planning. Okay.
So, I went to college in Bethlehem, Pennsylvania at Moravian College. It's actually got its distinction as it's the 6th oldest university in the country and the first one to educate women. So, as a side, my roommate in college is actually now the president of it. So I'm one of the few people that I guess can say I've slept with the president of my college. But I should say slept next to him. But it's a great school, and they have a good business program, so that was kind of the formal education part of it. And I had always had an interest in the markets. My great-grandfather and grandfather happened to actually work on the American Stock Exchange. And in college, I actually had an opportunity through a family friend to work on the floor of the exchange. So by the time I graduated college, I'd already passed my licensing exams and basically went right into working as a broker in Manhattan. And, being right out of college, maybe that wasn't the best choice to start, but I made my way into the mutual fund industry, worked there for a period of probably 15 or so years, and then actually wound up living in Victoria, BC for 5 years, where I worked for the Royal Bank of Canada, RBC, up there in the financial business. And about 6 years ago now, I moved back down to the Bay Area and have been working in a private practice with another individual, and there were some changes there. And now myself and one of the partners from that firm created Marathon Retirement Planning and have been running that firm for the last 2 years as registered investment advisors. So we work on a fee basis. We don't receive commissions on the investment work we do. So we work as fiduciaries, and that's kind of the career path.
So, Daniel, for those people who are listening in right now, especially those people who are approaching retirement age, what final thoughts would you like to leave them with before we move on to our last question for today?
I would say the best piece of advice I could give somebody is start sooner than you think you should, because most people let it go, and I think that kind of back to the question earlier about what's the feeling you get. It's incredible when we finish the process. You can see people look physically lighter. They've got smiles on their faces, and in most cases, it's not as bad as they thought. But there is a sense of relief that at least I know what it is. Whether it's good news or bad news, it's not unknown anymore. So start sooner than you think you should.
Okay, Daniel, so if there is somebody who feels that they want to know more about planning for retirement, because obviously we were restricted by time and they've only provided a 30,000-foot overview today. If that's the case and they want to know more, what's the best way for them to reach you?
Well, there's two ways. They can go to our website, which is just marathonretirementplanning.com, all spelled out. Or they can always pick up the phone and give us a call. We're happy to have a complimentary consultation with somebody for, say a 30-minute phone call to answer some questions. And that's a direct line to me, which is 925-726-401k, which dials out 4015.
Well, Daniel, the time has just flown by. I can't believe we've come to the end of the show already. However, we do have to go. So again, as a reminder, ladies and gentlemen, we have been listening to Certified Financial Planner Daniel Leonard. Thank you so much for sharing so generously with us today, Daniel. You have certainly demonstrated that you are a true educator, advocate, and trustworthy advisor for your clients' success. So thank you.
Thank you, Stewart.
You're so welcome, Daniel. And you know something? I'd just like to take a moment to say an even bigger thank you to you. Yes, you, the listener. Without you, we wouldn't have anybody to speak to. So thank you so much for joining us on this insightful and informative discussion with one of the leading certified financial planners in the San Ramon, California area today. Again, his name is Daniel Leonard. Make sure you do check him out, give him a call, send him an email, visit his website. He has some great resources on there. I mean, he has something called the 7 Steps to Organizing Your Financial Life. That's certainly worth a download and taking the time to check that out. So in any case, whatever you do decide to do, I'm sure that after listening to Daniel today, that you're going to be in good hands. So that's it, folks. Again, my name is Stewart Andrew Alexander, and we'll be back shortly with some more leading financial planning professionals in this, our series of Let's Talk Retirement Conversations. So, until then, take care, have a great day, and we'll talk real soon.
Thank you for tuning in to Impact Makers Radio. To listen to all past, present and future industry thought leaders and trendsetters, visit us at impactmakersradio.com.